Friday afternoon live with Cynthia Aasen. I am here to chat with her about something really neat, which is how to invest in real estate without actually having to buy a darn property. A lot of people don't realize that it's doable. And one of my personal absolute favorite parts about it is that you can do it with registered funds, RRSP, TFSA. So, as a real estate investor, we often thought, I can't have my cake and eat it too. How do I get that tax deduction for investing in my RSP, but then get to put my money where I believe in, which is the real estate market? Well, you can. So Cynthia, can you just tell us what this is all about? Because I don't even think a lot of people realize that you can still invest in real estate without actually having to buy a house or a condo or whatever.
Where do I start? Actually, it isn't, it's a fairly simple equation. We find companies that are looking to grow. They're successful at what they do, and they're either real estate developers that are looking for equity to do what they do, either purpose-built rental, multifamily value add, development. So there's all different ways, and these companies allow private investors to give them money through a structure, either limited partnership or a mutual fund trust. It's all structured so that the investors have, I would call an indirect interest in that company. And you can put as little as $25,000 and be a part of a 600 unit high rise in the GTA. So it's a way for you to still invest in that real estate, but not have all the exposure. It's very passive. You're a limited partner. You put your money in, you watch, they'll provide you updates, regular, ongoing. And ultimately the goal is to get you returns anywhere from 14 to 22% annualized. That's sort of the typical returns we see depending on each of the deals that we're doing. Obviously, the greater the risk, the greater the reward.
Yeah, and it makes perfect sense. And I'm hearing you say some places have a minimum investment of 25,000. I mean, I don't know where you're going to find a house you can buy with $25,000 down, but if you got $25,000 available to invest and you don't just want to put it in a GIC or a mutual fund or something like that, well, you can be part of a real estate deal. So, okay, so you don't get to own the whole 600 unit building all to yourself, but you get to own a piece of it, and then you get the reward of having your return on investment from however that building is performing. I think that's super cool. And like I said, these are RSP and TFSA eligible. How come that is? How does that work? I'm no RSP expert, but most people think that you can't. Yeah.
It's how they're structured. So there is qualification and characteristics that are provided by the government, and the lawyers create these documents. They're called offering memorandums that address each of the things that are required so it is eligible for registered accounts. It's not just RSP, it's TFSA, LIRAs, RESP, putting your money, you might have a young child, you can do a self-directed registered education savings plan, invest and watch this grow. And they have the time horizon. So for us, it's really about putting your money to work in asset classes that are very good during recessionary times right now. We all know that interest rates are going up, and the reason is there's inflation and they are predicting a recession. So our focus right now is looking to those companies that actually weather those storms the best, and that is the multifamily real estate asset class. Rising interest rates mean more rental demand, and obviously we do all of our homework on these companies to make sure that they are well protected given the rising interest rates. So we do a very robust due diligence on each of them and independently verify the pro formas and the background and all the checks that you would do on your own as an individual investor.
Yeah, it makes sense to me. Now, here's something I've been wondering, because when we're looking at people buying, a house, rents have crept up, but interest rates have crept up too. So as we're analyzing investment properties across North America, the raising interest rates mean the mortgage payment is higher. So the average cash flow on the average house right now is a lot tighter. It's tough to find cash flow in Canada. It's still out there, but it's tough to find. How does this affecting these types of investments? Is the return on investment going down because of the increased interest rate, or how are these companies faring with the interest rate environment?
Well, the reason I said a fund that is investing in multifamily assets, they do well during recessions because rental demand and rental growth is outpacing inflation generally. And that means it's
Right.
probably outpacing the rising interest rates. They also are required by their lenders to do rate caps, which means they can, they don't rise as quickly as the rest of the interest rates. They also
Mm.
have short-term leases. So as this rental demand grows, they can easily bump the rental prices. And having it spread out across a number of assets protects the investor from any one market if one's
Hmm.
hit harder than the other. I read a report done by Desjardins, and they said that provinces that have commodity-based or agriculture won't suffer as much as properties that are in BC or Ontario because we're more real estate based. Even the Atlantic provinces should do well. They're more based on manufacturing, aerospace. So there's just a way to do your homework and make sure that you're invested with companies that can weather the storm.
Yeah.
I
So
really believe it is going to be a recession, and I don't think the government has any choice.
so if I'm hearing you right, resource-based provinces are going to fare a little bit better. Shout out to Alberta.
I know it's your turn now. I love
That's
Alberta.
right.
Yeah, so I think that the key right now is to do your homework, do your due diligence, understand what you're investing in, and it is a passive investment, so you don't have to spend. We've done the homework for you, and we're happy to share it. So we have a lot of investors that like to read
Right.
all the information and all the analysis, and we're happy to provide it.
Cool. Well, hey, I'm learning in this conversation too. Like it's neat to know that you don't just have to buy a house to be able to invest in real estate. So anyways, I tagged you in this post, Cynthia. If people want to hit you up and slide into your DMs and ask you more. And if anybody wants to chat with me a little bit more about it, I mean, I can tell you from my experience as someone who's actually invested in this stuff what that feels like. And we're also going to be hosting our Mogul Mastermind on November 30th on this topic too. So if you want to come hear Cynthia talk in explicit detail about how this works, come on out. And Cynthia, thanks for popping in on a Friday.
Yeah, thanks, James. Have a great weekend.
You too.
Enjoy.
Thanks.
Thanks. Bye-bye.